Has Elon Musk's political activity hurt Tesla's business? And if so, where does it go from here? I'll answer this question and more in this video. If you're a Tesla investor that is new to my account here on YouTube or on X, you may find some of the things that I'll say on this topic a little controversial. But hear me out before reaching your own conclusions. My longtime X followers know that I have had a rather strong opinion about Elon Musk's involvement in politics ever since his acquisition of Twitter in 2022. I was recently asked from a follower to share my thoughts on this topic, and he even suggested a video. Simply brilliant. Why didn't I think of that? I want to qualify this video with the following disclaimer. I believe that, like anyone else in society, Elon Musk is fully entitled to have an opinion on politics. In fact, my personal political views are and have always been mostly aligned with Elon's. I have always tried to make this very clear in my commentary on this topic, but we all know that Twitter, or X, is maybe not the best platform for coherently sharing a complex argument. My criticisms of Elon's political activities have always been from the perspective of a Tesla shareholder, insofar that those political activities are detrimental to the Tesla brand. And here's where I think most people stop following my logic. Branding is a very abstract topic that is very difficult for the general public to measure empirically, and most people just don't understand it. But having an understanding of this concept is essential to understanding the foundation of my position on this topic, and why I have been so vocal in my criticism of Elon Musk on this topic over the past few years. In this video, I will briefly explain the concepts of branding and brand equity. I will discuss how Elon Musk's political actions have impacted Tesla's brand equity over the past few years. I'll review Tesla's business performance in this context. And finally, I'll discuss where I think Tesla's brand and business goes from here. A brand is an intangible asset. That means you cannot see it, hold it, or touch it like you could for a tangible asset. It's not like a machine in a manufacturing plant. It's easy to measure the value of a machine. You know how much the machine costs and how many widgets it can build per year. Measuring the value of an intangible asset requires a completely different approach. Back in late 2021 and early 2022, Tesla's brand was widely considered a unicorn. Multiple market research firms, such as this one and this one, were independently praising Tesla for how quickly its brand had grown over the previous year. These market research firms consider things like financial performance of the branded products, the role that the brand plays in the consumer's purchase decision, and the competitive strength of the brand relative to its peers. These insights are captured mainly through primary market research directly with consumers. But why does this matter? Interbrand, one of those market research firms that I mentioned earlier, explains it very well. Quote, "Strong brands enhance business performance primarily through their influence on three key stakeholder groups: current and prospective customers, employees, and investors. They influence consumer choice and create loyalty, attract, retain, and motivate talent, and lower the cost of financing. The influence of brands on current and prospective customers is a particularly important driver of economic value. By expressing their proposition consistently across all touchpoints, brands help shape perceptions and therefore purchase behavior, making products and services less substitutable. In this way, brands create demand, allowing their owners to enjoy higher returns. Strong brands also create continuity of demand into the future, thus making expected returns more likely or less risky. Brands therefore create economic value by generating higher returns and growth, and by mitigating risk." End quote. In short, stronger brands have more demand for their products, and more demand means higher unit sales, higher prices, or both. Now that we've established why brands are important, let's review the timeline. Up until Elon's acquisition of Twitter in April 2022, he was relatively quiet and neutral in the political sphere. Sure, he had his opinions, like everyone else, but it largely stayed off of mainstream media and social media. In May 2022, I started to see where things were going. I sent out these two tweets at the time. Elon started to engage quite heavily into the political discussion at this point. Fast forward to late October 2022, and Elon finalized his acquisition of Twitter. By this point, Elon was heavily engaged in the political forum, so much so that the vast majority of his Twitter content was focused on politics. There were some early warning signs that Tesla's CEO's political activities were starting to make an impact. In November of 2022, a report was released by 100X, a firm that had been tracking Tesla via brand loyalty surveys since 2019. This report showed that Tesla's brand loyalty had fallen rapidly to below the industry average. Rob Pace, 100X CEO at the time, said this, quote, "The future loyalty data is really worrisome if you're Tesla because it tends to translate into market share 6 to 9 months out. There are storm clouds," unquote. Also in November 2022, the Wall Street Journal ran an article citing new market research from a different firm, YouGov, which found that Tesla's brand favorability declined considerably throughout 2022. YouGov acquired this data by surveying approximately 80 to 100 Americans every day. Net brand favorability was calculated by subtracting the percentage of survey respondents with a negative view of the brand from the percentage of respondents with a positive view. A negative percentage means more respondents have a negative opinion of the brand. The survey showed that, unsurprisingly, the biggest losses in brand favorability came courtesy of US citizens who self-identify as Democrats. And importantly, the gain in brand favorability from Republicans was not enough to offset the loss in favorability from Democrats, leading to a net decline overall. 2 months later, a new report surfaced, this time from Morning Consult Brand Intelligence, showing continued deterioration in brand favorability through January 2023. It was around this time that Tesla implemented its first wave of massive price cuts, which, when combined with the newly available Inflation Reduction Act, provided up to 30% off some Tesla vehicle models. Meanwhile, operationally, Tesla had a very strong financial year in 2022. Vehicle delivery volume grew 40% over 2021. Adjusted earnings grew 65% over 2021. Tesla's vehicle market share had reached an all-time high. However, the intra-year trends showed a strong directional deterioration of the underlying business. Tesla's automotive gross profit margin peaked in Q1 of 2022 and proceeded to decline every subsequent quarter for the next 2 years. Overall vehicle delivery volume declined for the first time ever in 2024, and so far calendar year 2025 is pointing to yet another year-over-year decline in vehicle volume. The combination of declining volume on lower prices and lower profit points to underlying demand issues for Tesla vehicles. Now, was Elon Musk's acquisition of Twitter and subsequent political activity the only reason why Tesla's vehicle business has deteriorated? Of course not. This decline is a result of a number of factors, such as increased competition, particularly in China, a dated vehicle lineup, and EV interest saturation in North America. We should also acknowledge that Tesla's prices in 2021 and 2022 were artificially inflated from a lack of new vehicle supply in the market, which was caused by COVID-related supply disruptions of key automotive parts. And so Tesla's financial decline from 2022 to today was surely more pronounced than it would have been otherwise. All that being said, there is ample evidence that progressive or left-leaning countries or US states have seen a disproportionate drop in demand for Tesla vehicles. No one can deny this. In Europe, for example, Tesla's 2025 year-to-date sales are down, while overall sales of electric vehicles are actually up. In California, Tesla's biggest and most important US market, sales have been on a steady decline for almost 2 years now. And a lot of this can be traced back to the drop in Elon's popularity in these regions. So where does this leave Tesla today? Ultimately, I do believe that Elon did cause considerable damage to Tesla's brand, and this will be difficult to recover from, at least in the near term. Fortunately for Tesla, its energy business has heavily buffered the decline in the vehicle business. Storage deployments have soared, and at over 30% gross profit margin, this has been a tremendous tailwind for the company's operations. Given that Megapack is a business-to-business product, and that Megapack makes up over 90% of Tesla's energy volume, there is no consumer brand impact on this part of the business. There are some early signs that the auto business's decline has stabilized. The new Model Y refresh is extremely popular overall. Automotive gross profit margin has stopped declining sequentially. Tesla's new higher-priced Model Y L and Model Y performance trims seem to be attracting a lot of positive attention. And the decline of Tesla volume in Europe seems to have stabilized. But longer term, I think that what will ultimately help raise Tesla's demand to another level is the progression of Tesla's full self-driving software. It may not happen overnight, but the vast majority of the public still has no idea what FSD is capable of, and what it will be capable of in the future. Even among existing owners of Tesla vehicles, FSD penetration rate is only 12%. Given that Tesla has only a tiny percentage of the global vehicle market, and only a tiny percentage of the current Tesla owners use FSD, the opportunity for Tesla to drive demand and sales of its products by differentiating with FSD is extremely large, surely warranting its very own dedicated video. And this is why I believe that although Tesla's financials have taken a hit in recent years, the intrinsic value of the company has never been higher. What do you think? Let me know in the comments. If you like this video, please like and subscribe to my channel. Your support will help me create more videos like this in the future. As always, you can find me on X at TSLAFANMTL, Tesla Fan Montreal. Until next time, thank you.